It's December 16th, 2020, and Bitcoin prices just jumped over 20,000 once again. The last time this happened in 2017, there was a big craze on the cryptocurrency market. The price of Bitcoin jumped exponentially. It was at 1,000, 2,000, 4,000, 8,000, then it jumped all the way up to 20,000. But just like the Tower of Babylon, the fall was even greater. It crashed from the price of 20,000 and it went to less than half of that price and kind of stayed there for the next 2 years. But what's interesting is in the year 2020, this year, the price of Bitcoin has steadily grown throughout the year without much notice and fanfare. Mainstream media rarely talks about Bitcoin. Its slow and steady growth is far less exciting to the common individual than the leaps and bounds it was going by in 2017. Imagine a 100-meter sprint versus a marathon. It's much more exciting to watch the person sprint as fast as they can through the 100 meter than to watch someone go on a marathon for 25, 50, 100 kilometers. But what we don't understand is that the person who's going at a steady pace can go further, for longer, and more efficiently. Well, that's exactly what's happening with Bitcoin now. Cryptocurrencies in the year 2016, 2017, they were all the craze. They were the new kids on the block. No one really understood them. No one knew what they were used for, but they knew that the value of Bitcoin was rapidly growing and everyone wanted to invest. So they did. And what happens when you have a lot of people who want to buy into this product that a few people have? The prices skyrocket. And the prices did skyrocket. But just like that, when everyone had all the Bitcoin they wanted, and they wanted to make a quick buck and sell those Bitcoin, the price drastically dropped once again. But this time it's different. The crash that happened near the end of 2017 and 2018 scared away a lot of the people that didn't really understand what Bitcoin was. And those who persisted, those who saw the importance of such a currency in the future that stayed, are reaping the benefits now. Cryptocurrency is a digital currency asset. And as a digital currency asset, it's showing us, at the very least, what money is going to be thought of in the future. Maybe not today, but in 20, 30 years from now, the idea of normal currency, of fiat currency, is going to be vastly different than it is today. The earliest example of paper currency that we have, of the form that we use today, where you have a government that issues a currency with a value that's dictated by law, fiat currency, is from the Chinese Empire of 1,000 years ago. The Song dynasty produced one of the earliest printed form of currencies in the 10th century AD. These early currencies provided direct conversion from that piece of paper to a certain amount of gold, silver, and commodities. However, you weren't directly allowed to convert those currencies into their gold and silver forms. Rather, in a few years, you were supposed to return those currencies to get new currency at a slightly higher valuation. Obviously, this early form of currency created a lot of inflation and over time had to be regulated. Over the next few hundred years, the way we thought about money and currency evolved, leading us into today, where most world currencies in the world, in some form or other, are regulated through governing bodies. These governing bodies dictate how much new currency to print every year, how much of the old currency to invalidate every year, what that currency is worth, relative to other currencies in the world. The supply of each currency and its ratios relative to other currencies dictate the value of money. If you have a governing body that thinks that the denomination of currency in your country, the dollar value in your country, is lower than another, then you are inherently creating economic systems and conditions that favor certain types of work over others in specific countries. There's a reason why a lot of manufacturing happens in Southeastern Asia. The value of currency is so low there that Western countries can get away with paying a lot less to manufacture their goods in the East and then have them shipped over in the West. The cost of labor is lower, so manufacturing is cheaper, so you get better products at a cheaper price. World economics, geopolitics, relationships between countries all play a role in the value of the currency that you hold in your pocket. And that currency isn't really even yours. For most of us, we have to hold our money in a bank where it sits, and if you do nothing with it, if you just let it sit, its value goes down over time. That's not really the case with currencies like Bitcoin and other cryptocurrencies. Bitcoin specifically is designed to be a currency that's for the people, managed by the people, and it's essentially as decentralized as it can be. It's a currency that is gained by participating in the Bitcoin economy. You keep track of how much Bitcoin is in the market. You keep track of how much Bitcoin is transacted in the market. That is the entire point of mining. Mining is essentially how someone with a computer or any type of computational device is able to keep track of the calculations in the ledger of Bitcoin. That means that every single transaction is essentially agreed upon by everyone who is mining Bitcoin. The reward for calculating the transactions in the ledger, well, you might be rewarded with a Bitcoin. And that is exactly what mining does. But what does this do? This creates a system in which the regulation, the supply, and the maintenance of the currency is left to the people. The people who are in charge are the people who are mining the currency. And often these are the people who are using the currency as well. This means that the power of the currency resides with the people who use them and create them. This balance completely shifts our relationship with currency and money. And this is a scary thought. Since the start of our modern thinking around cryptocurrency, about 10 years ago, we've come to understand the value in such a decentralized system a lot more. Yes, Bitcoin might not be the perfect cryptocurrency. Its infrastructure is very slow, transaction fees are very high, and it's not the most scalable currency you can get. But you can essentially have an infinite denomination of the currency. The currency isn't controlled by a governing body, which means that individual actors can't make changes to the currencies in their own self-interest if they're in a position of power. Abuse of power is much less likely, and the more and more people use the currency, the more stable it becomes. And that's exactly what's happened in the last 3 years. In 2017, a lot of people went into Bitcoin thinking it was a way of making quick buck. They would buy low, sell high. And that is the pitfall that created the crash at the end of 2017. But it was also the reason why it accelerated its growth in the early half of that year. But since then, actual adoption of Bitcoin in our society has increased dramatically. There are over 5,000 ATMs that dispense Bitcoin currency right now in North America, Europe, and some parts of Asia. And every day this number is increasing. The number of retailers that accept Bitcoin as an actual form of currency has increased dramatically. Tesla accepts payment in Bitcoin. Burger King accepts payment in Bitcoin. You can buy fried chicken with Bitcoin. So why am I telling you all of this? The price of Bitcoin recently hit an all-time high of $20,000. And suffice it to say, it'll likely steadily grow over the long term, over the next few years, as more and more adoption of the currency happens. And as the adoption of this currency grows, its stability will grow. It's recognized in many legitimate exchanges. The New York Stock Exchange recognizes Bitcoin. You can trade it with a lot of e-commerce platforms like Robinhood, Wealthsimple in Canada, the Tokyo Stock Exchange. Many places where currencies and commodities are traded are starting to recognize the value of digital currencies. And that is driving up the price of Bitcoin because people are accepting it. Imagine the early days of normal fiat currencies when bartering was the common thing. Would you be convinced if you had a piece of gold to give it to someone and to accept a piece of paper with some markings in exchange? Could you convince a farmer to give their goods in exchange for a piece of paper with a signature on it? It would be hard pressed. And we're seeing slowly this shift happening from the fiat currencies we hold today to the digital currencies of tomorrow. And that's why I think that it's important, even if you don't invest in Bitcoin, to learn more about it. And I hope this video has at least convinced you to look deeper into what cryptocurrencies are and why they may be useful to you today and in the future. As for me, I've had Bitcoin since before 2017, and I will continue to hold on to my currency long after today. If you like this type of content, make sure to drop a like on the video and subscribe to the channel if you haven't already. Also, make sure to drop a comment about your thoughts on cryptocurrencies. If you think it's a fad, if you think it's good for our society, what your favorite cryptocurrencies are. If you have any questions about cryptocurrencies, write all those down below. And remember to always keep learning. Bye-bye.